China retaliated against the US by imposing significant tariffs. They imposed tariffs of 84% on a range of US goods, including agricultural products, automobiles, and technology. This move came after the US increased tariffs on Chinese goods, escalating the trade tensions between the two nations. The trade war between the two economic giants escalated, with both sides refusing to back down. Tensions are running high as each country tries to protect its economic interests. The tariffs are a significant development in the ongoing trade dispute. They represent a major shift in international trade policies. These tariffs impact businesses and consumers on both sides of the Pacific. American farmers, manufacturers, and tech companies are feeling the strain. The situation is being closely watched by the global community. Economists and policymakers around the world are analyzing the potential long-term effects. The tariffs are a major challenge for businesses, forcing them to rethink their supply chains and strategies. Many are looking for ways to mitigate the impact. They are trying to navigate the changing trade landscape, which has become increasingly unpredictable. Companies are exploring new markets and partnerships. The impact on consumers is also a concern. Higher tariffs mean higher prices for many everyday goods, from groceries to electronics. Prices for many goods are expected to rise, putting additional financial pressure on families. This could lead to reduced consumer spending. The trade war has created uncertainty in the global economy. Markets are reacting to the news with volatility, and investors are cautious. Businesses and investors are worried. The situation is complex, with no clear resolution in sight. The economic landscape is shifting rapidly. There are no easy solutions. Both countries must navigate a delicate balance between protecting their economies and maintaining international trade relationships. China's tariffs are strategically aimed at U.S. industries. These industries are important to President Trump's political base. This includes agriculture, manufacturing, and energy. The agricultural sector is hurting. Soybean exports to China have plummeted. Farmers are feeling the pain. The manufacturing sector is also affected. Tariffs have increased the cost of imported materials. The energy sector is not spared. Tariffs on liquefied natural gas are hurting U.S. exports. This is a blow to the U.S. energy industry. China's tariffs are a direct challenge to Trump's trade policies. The impact on U.S. industries is significant. Businesses are struggling, workers are facing job losses. The tariffs are having a ripple effect throughout the U.S. economy. President Trump insists his tariffs are necessary. He claims they will protect American jobs. He argues they will reduce the trade deficit with China. However, critics question his approach. Trump's claims about the tariffs are disputed. Evidence to support his assertions is lacking. Some experts argue the tariffs harm the U.S. economy. They point to rising costs and job losses. Trump's trade war has created uncertainty. Businesses are delaying investments. Consumers are worried about rising prices. The stock market is volatile. The situation is causing anxiety. The trade war is a high-stakes gamble. The outcome is uncertain. The risks are significant. The potential consequences are far-reaching. The trade war is having a real impact. Factories that once buzzed with activity now stand eerily silent. Workers who once felt secure in their jobs now face an uncertain future. The ripple effects are being felt far and wide, from bustling ports now eerily quiet to newsrooms reporting on the escalating tensions. Trade between the U.S. and China has declined significantly. Cargo ships that once moved goods across the Pacific are now at a standstill, and the once robust trade graphs are showing a steep decline. Warehouse shelves that were once filled with products are now empty, a stark reminder of the ongoing trade disruptions. The trade deficit has widened dramatically. Financial analysts are pointing to charts that show a growing gap, and economic graphs are painting a bleak picture. The numbers are clear. The U.S. is importing far more from China than it is exporting, leading to a significant trade imbalance. The U.S. economy is slowing down. The evidence is clear. Business districts that were once bustling with activity now have fewer people. Storefronts display for lease signs, and factory production lines have slowed to a crawl. The economic slowdown is palpable. In 2024, the U.S. trade deficit with China was $295 billion. This staggering figure highlights the extent of the trade imbalance. Businessmen and financial analysts are poring over data, trying to make sense of the numbers and what they mean for the future. This is a significant increase from previous years. Historical comparisons show a worrying trend of growing deficits. Stacked bar charts illustrate the rapid growth of the trade deficit. and economic analysts are explaining the trends and their potential long-term impacts. The tariffs are a major contributing factor. Cargo containers are stamped with tariff labels, and customs officials are meticulously inspecting goods. Businessmen are in heated discussions about the impact of these tariffs on their operations and bottom lines. They have disrupted trade flows. Supply chains that once operated smoothly are now facing significant disruptions. Containers are held up at customs, and cargo trucks are stuck in traffic jams, unable to deliver goods on time. The entire logistics network is under strain. U.S. businesses are feeling the pain. Businessmen are staring at declining profit margins, and offices are emptying out as employees are laid off. Small business owners are particularly hard hit, with many worrying about their future and the sustainability of their operations. Companies are reporting lower profits. CEOs are holding meetings to discuss the financial downturn, and quarterly reports are showing significant losses. Business executives are somber, grappling with the reality of lower profits and the challenges ahead. Some are moving their operations out of China. Factories are being relocated, and moving trucks are a common sight outside businesses. For sale signs are popping up in front of factories as companies seek to mitigate the impact of tariffs by shifting their operations elsewhere. This is a direct result of the tariffs. Factory machinery is being dismantled, and workers are packing up their belongings. News headlines are filled with stories about how tariffs are causing businesses to move, highlighting the direct link between policy decisions and economic outcomes. The trade war is a lose-lose situation. A broken scale with U.S. and China flags symbolizes the imbalance, and a torn trade agreement underscores the conflict. Businessmen are in disagreement, reflecting the broader tensions between the two nations. Both the U.S. and China are suffering. Market stalls in both countries are empty, and factories display closed due to tariffs signs. Economic graphs show losses for both nations, indicating that the trade war is taking a toll on both sides. There are no winners in a trade war, only casualties. The imagery of a battlefield with economic symbols drives home the point. Businessmen look defeated, and news anchors summarize the grim impact of the trade war. In the end, it's clear, the trade war leaves behind only casualties, with no real winners in sight. Section 5. The R-word recession fears grip the market. The trade war has fueled fears of a recession. The ongoing tensions between major economies have created an atmosphere of uncertainty. Investors are on edge, and the markets are reacting to every piece of news, whether good or bad. The fear of a prolonged economic downturn is palpable. The stock market is volatile. Investors are nervous. Every day brings new fluctuations, and the lack of stability is causing widespread concern. Many are questioning whether their investments are safe and if they should pull out before things get worse. Economists are warning of a potential downturn. The situation is precarious. They point to various indicators that suggest the economy is slowing down. From reduced consumer spending to declining manufacturing output, the signs are troubling. J.P. Morgan Chase CEO Jamie Dimon warns of a recession. His words carry weight in the financial world, and his concerns are being taken seriously. Dimon has highlighted the risks posed by the current economic policies and the potential long-term impacts. He blames the tariffs for creating uncertainty. The trade policies have disrupted global supply chains and increased costs for businesses. This, in turn, is affecting consumer prices and overall economic stability. Other business leaders share his concerns. The mood is somber. Consumers are also worried. The uncertainty is affecting their spending habits, and many are cutting back on non-essential purchases. They are facing higher prices for everyday goods. From groceries to gasoline, the cost of living is rising. This is putting additional pressure on households that are already feeling the pinch. This is putting a strain on household budgets. Families are finding it harder to make ends meet, and many are dipping into their savings to cover basic expenses. The financial stress is taking a toll on their well-being. The trade war is impacting American families. The ripple effects are being felt across the country, from small towns to big cities. The uncertainty is making it difficult for people to plan for the future. The threat of a recession is real. Experts are closely monitoring the situation, and many believe that a downturn is inevitable if current trends continue. The question is not if, but when. The trade war is a major risk factor. The tariffs and trade barriers are disrupting international commerce, leading to slower economic growth. Businesses are struggling to adapt to the new reality. The economic outlook is uncertain. Analysts are divided on how severe the impact will be, but there is a consensus that the coming months will be challenging. Companies are bracing for tough times ahead. The situation is being closely monitored. Governments and financial institutions are on high alert, ready to take action if necessary. The hope is to mitigate the impact and steer the economy back on track, but the road ahead is fraught with challenges. Section 6. From iPhones to toys, everyday items feel the pinch. The tariffs are hitting consumers in their wallets. Prices for everyday goods are rising. This includes electronics, clothing, and toys. The impact is widespread. Smartphones are becoming more expensive. Apple iPhones are assembled in China. The tariffs have increased the cost of production. Consumers are paying the price. Clothing and footwear are also affected. Many U.S. brands manufacture their products in China. The tariffs have increased costs for these companies. Consumers are facing higher prices. Toys are not immune to the tariffs. China is a major toy manufacturer. The tariffs have made toys more expensive. This is bad news for parents and children. Section 7. A House-divided experts debate. Trump's trade war. Trump's trade war has divided experts. Some support his tough stance on China. Others criticize his approach. The debate is heated. Treasury Secretary Scott Bessent defends the tariffs. He claims they are necessary to protect American interests. He argues they will force China to make concessions. Critics argue the tariffs are harmful. They point to the negative impact on the U.S. economy. They argue the tariffs hurt American businesses and consumers. The debate over the trade war is complex. There are valid arguments on both sides. The outcome of the trade war remains to be seen. Section 8. A World on Edge: Global Reactions to the Trade War. The trade war between the U.S. and China has global implications. Other countries are worried. They are caught in the crossfire. The European Union has criticized the tariffs. They have imposed retaliatory tariffs on U.S. goods. The trade war is straining relations between the U.S. and its allies. Canada is also affected by the trade war. They are a close trading partner of both the U.S. and China. The Canadian economy is feeling the impact. The trade war is creating uncertainty in the global economy. Businesses are hesitant to invest. Consumers are worried about the future. Section 9. The road ahead. Uncertainty looms in U.S.-China trade. The trade war between the U.S. and China continues. The outcome is uncertain. The stakes are high. The global economy is watching closely. Negotiations between the two countries are ongoing. Progress has been slow. Tensions remain high. A resolution is not in sight. The trade war has entered a new phase. It is a war of attrition. Both sides are digging in. The conflict could last for years. The trade war is a defining issue of our time. It will shape the global economy for years to come. The world is holding its breath.